Today is Monday, the 26th of January, 2026, and we're having our morning analysis. I'm sure we had a great weekend. So, as usual, I'll quickly run through the fundamental events we have for the week, then we'll go on the charts to check out the technicals. Now, the key events are the ones I will put my attention on. Now, today, Monday, we have just medium impact events. By 2:30 p.m. today, there'll be core durable good orders and durable good orders from the United States. Now, they are both medium impact events, and both combined together could produce some level of volatility in the market. So I want us to pay attention to that. Good morning, Mr. Okay. Now, tomorrow, Tuesday, 4 p.m., we have Consumer Confidence and Richmond Manufacturing Index. Again, both of them are medium impact event, but both combined together could give some volatility. But then there's also a tentative speech from President Donald Trump. So tomorrow we need to be very careful, not just with the dollar, but generally with the market, because Donald Trump's speech can cut across, all financial assets. So when trading tomorrow, just put it in mind to trade with a lot of caution. Good morning, Madam Monaji. Now, for Wednesday, we have a lot of events for Wednesday, starting from the CPI monthly and CPI yearly from Australia, which will take place 1:30 a.m., which is night time Nigeria here. Like I always say, you can either stay awake or wake early to trade it. The choice actually is yours. Okay, there's a third one, trimmed main CPI, everything CPI, coming up 1:30 a.m. Now, the ones that are going to be tradable for us for the day, we have 3:45 p.m. Bank of Canada monetary policy report, Bank of Canada restatement overnight trade. So there'll be interest rate decision from Canada 3:45 p.m. on Wednesday. So volatility is expected, on the Canadian dollar. Okay, Techno KJS, good morning. I'm doing great. I hope you're doing great too. And 8 p.m. on Wednesday, there'll be federal fund rates, FOMC statements, and FOMC press conference by 8:30. So FOMC comes up by 8 p.m. on Wednesday. Now, FOMC is another very, very volatile, news event in the forex market. So we expect volatility on the dollar on that Wednesday. On Thursday, there'll be unemployment claims by 2:30 p.m. This will be tradable. So I want you to put that in mind and plan ahead to trade it. Unemployment claims by 2:30 p.m. on Thursday. And finally, on Friday, the high impact event of Friday will be uh, GDP from Canada by 2:30 p.m. Then core PPI and PPI from United States. Now let's put all this in mind, because these are trading opportunities from the fundamental perspective. Now I'll switch over to the chart now. We'll look at what the chart is saying for this week. Now we are expecting a lot of activity on the Australian dollar and the New Zealand dollar for this week. And virtually the instruments I'll be sharing with us will be purely AUD, AUD, AUD. I think one NZD will be there, but it's basically AUD. So that tells us a lot is happening to the economy of that country. So I'll start with the AUD USD. Now, on the weekly time frame, we can see on the AUD USD price is really in an overall downtrend, lower high, and the last week candle closed, exactly on that trend line, but then it coincides with a resistance. So that makes this point where we're starting the week a confluence point from where we are expecting a bearish movement. Overall trend is bearish, and we're expecting that bearish movement again to continue this week. That's on the weekly time frame. Now we can flip down to the 1 hour time frame because of time, and this is what we are seeing on the 1 hour time frame. I will draw my trend line, and we're going to anticipate price breaking out, on the lower side of this trend line. It can happen anytime in the week. It can happen today. But the important thing is once price is able to make a clean break below this trend line, RSI below 50. Now in this case, MACD should be below 0. Very, very important. Once that happens, once those conditions are met, we're expecting a free bearish movement on the AUD USD. Now, in terms of profit potential, we're going to be seeing price drop to the tune of about 55 pips to Fibonacci 38.2, about 85 pips to Fibonacci 50, and as much as about 116 pips to Fibonacci 61.8. So we're looking at price movement between about 50 to 60 to about 100, and 10 pips on the AUD USD this week. Please take note. This will most likely happen except market condition changes. All right. Secondly, like I said, we're looking more at the AUD this week, or that's what the market is giving us. Next is the AUD card, and it's still the same bearish movement we're expecting on the AUD card. Now, the AUD card structure is very, very close to what we saw on the AUD USD, but we're taking this one from the monthly time frame. So from the monthly time frame, we can see that price is in an overall bearish trend. Again, we have lower high, lower high, lower high, lower high, lower high, and lower high. And also again, we have a resistance. So we have this region again, where we're starting the week as a confluence from where we're expecting a further bearish movement on the AUD card. Again, we'll flip down to 1 hour time frame, and we're going to be expecting a bearish breakout in the course of this week. We have a rising wedge just like we did with the AUD USD. So also here, we're going to be expecting a breakout below that resistance zone from the monthly time frame. Okay, before I draw the Fibonacci, we're going to be expecting price to break out below the lower trend line, and our confirmation will be RSI clearly below 50. And again, MACD must be below 0 for this one. So we're bearish on the AUD CAD. And profit potential on this one too can be between the range of about 30 pips to Fibonacci 38.2, about 55 pips to Fibonacci 50, and about 81 pips to Fibonacci 61.8. So we're expecting movement in the range of between 30 pips to about 80 pips. That is, we should take note of that. All right. So thirdly, we're going to look at NZD card. I said this week is for AUD and NZD. Now, the first two setups I gave you, they are very, very high probability trade setups. So I want you to look at them, with caution, as in take note of them, and let's see how it evolves. Now, for the NZD card, we have again, overall trend is bearish. Technically, we expect a move to the downside. Now, this one doesn't have a corresponding resistance, but nonetheless, it's still very valid. Flipping to the 1 hour time frame, I'm seeing the formation of a double top pattern already. So we're going to be waiting for price to break out below the neckline. And with that, we can trigger a sell. And we can as well still draw our trend line there to form. We're not necessarily rising with this time, but then just to give us the outlook of the double top pattern. So we're going to be expecting a further bearish breakout. Now on this one, we're going to be expecting a move downwards to the tune of 36 pips to Fibonacci 50, 60 pips to Fibonacci 61.8, and 99 pips to Fibonacci 78.6. So we're expecting move in the range of 37 to like 100 pips on the NZD card. And finally, we may also look at Euro AUD, but that's just the last one. Being that here the AUD is the quote currency, this will be expected to go bullish compared to the others where the AUD is bearish. So on the daily time frame, the Euro AUD closed on a support zone for last week. So technically, we'll be expecting a reversal to the upside direction. So we take it to 1 hour time frame. And now earlier on, what I was seeing is the formation of an inverse head and shoulder. which will lead to a breakout to the upside. So let's just watch as the week unfolds if it's going to work out like that, where this region will be our neckline. If this works out, then once price breaks out to the upside, we should, as it breaks up above the neckline region, we should be ready to trigger a buy. But like I always say, don't also get too stuck on patterns in case it doesn't happen like that. So we have a good looking falling wedge pattern. Now price, if we are following the falling wedge, price actually has broken out. But then we can see that this is like an area where there's a range. So again, we can still use this place as a minor resistance because if price hit this region, there's possibility we might see a downward movement. So we want price to clearly break out above this same resistance that we're using as a neckline before we see a continued bullish movement. So we'll draw our Fibonacci tool and we'll look at our projected profit. Now price could go as much as 70 pips to Fibonacci 50, as much as 112 pips to Fibonacci 61.8, and as much as 176 pips to Fibonacci 78.6. So we have between 70 pips to about 170 pips movement we anticipate on the AUD, sorry, the Euro AUD. And also one of the confirmation is that we should look out for our RSI to be clearly above 50. Currently, it's still 49, so it's not yet active. MACD is about to cross above zero. All these are conditions that need to be met for this setup to be valid. But overall, we are bullish on the Euro AUD. All right, so that'll be all from my end this morning. For the benefit of those who are just joining us, I've analyzed four instruments this morning. Most of them are AUD. We are bearish on the AUD USD on 1 hour. We're bearish on the AUD card. We're bearish on the NZD card, and we're bullish on the Euro AUD. So take note of these pairs. They are high probability setup, which is expected to trigger possibly today or during the week. All right, so I'll take requests now as we begin to round up. All right, so Mr. Collins is asking me to check Euro USD. So let's check Euro USD. So Euro USD started out the week on a resistance zone on the daily time frame. Overnight we had this rejection candle, or that was the candle that closed last Friday. So due to the resistance on the daily time frame, technically we'll be looking out for a bearish, movement on the Euro USD. Now, though at the moment, I'm not seeing clarity on drawing trend lines, so we might just expect if we draw trend line this way, price is too far away from that region. So we're not going to be using trend lines, but we might be looking out for possibly maybe a chart pattern forming around this axis. But however it comes, whether a chart pattern forms a candlestick pattern or whatever kind of pattern, ultimately we are looking for a bearish movement. Though it's not really clear how to go about it for now, but I believe in the course of the day it will get clearer. But then we are bearish on the Euro USD. And the USD JPY, that's from Darlington White. If you remember my analysis on Euro USD JPY last week, I said I was bearish because on the weekly time frame we had a resistance. Eventually, price broke out. That was towards the end of the week, just hours before the week finally ended. So USD JPY had done the major move, anticipated for last week. So what's going to happen this week? So this is that resistance zone from where price, that's rejection candle there from where price broke out last week. Trying to look, this is not fitting in as support, so price already broke out below that level. Okay. So we're looking at this area as a key level, a resistance turn support. Price might drop here before, a bounce. Actually, we're not really getting 100% clarity, but that's all I can see for now. Price may react if it drops further to this region, but then that dropping too is not as if there's a clear cut entry, just general sentiment. Let's go down to 1 hour. We may see a retracement and possibly a drop here. But if price could go drop to this level, then we may see, some move to the upside from that region. So just watch out. It's not there's no clear entry at the moment, but that's just the market view I can see for now. Could get a retrace a movement to the downside before we experience a bounce. But I rather advise that person to look more at Euro USD. That's the Darlington White. That seems to have a more clearer outlook compared to the USD JPY. All right. Any other question as we begin to round up? You're welcome, Mr. Darlington. Okay, now look at USD CHF now on the daily time frame. We have something clearer here. Price is making some lower lows, and from here we could experience a bounce to the upside. This is a lot clearer than what we're seeing on the USD JPY. This daily. Let's check 4 hour and 1 hour. Okay, so the 1 hour is still giving us that outlook of the opposite of what we saw in the euro on the euro USD, but we still expect a bounce, whether we see a candlestick or a chart pattern. We just watch out in the course of the day. This is still better than what we saw on that USD JPY price. Maybe form a kind of a double bottom and break out to the upside, very possible. So we're bullish on the USD CHF. That's a lot clearer. All right, Mr. Tunde talking about gold. Okay, so let's check gold. All right, like I said, if you want to trade gold this season, one, I would advise you have a lot of liquidity. It will likely buy, as long as the issue of US acquiring Greenland is still in dispute, gold will likely buy. But the other side we don't know is when retracement will happen and to what extent is going to happen. Can see that happen on Friday. I said the price was going to likely break this resistance, which happened, but then there was a sharp retracement, a breakout again. So again today, that's a range. If price breaks above the range, you can buy, but maybe you just scalp and get out because we may expect to see all this sharp retracement that keeps happening. It can wipe out your profits and possibly affect your capital if you're not careful. So gold is to be traded with caution this particular season. So if it breaks out above this range, you may buy, but like I said, just scalp and get out. All right, Austin. Okay, before Austin, Mr. Pastor Samuel, GG. Okay, so let's check the GBP, JPY. All right, so for the GBP, JPY on the monthly time frame, Price is trading around the resistance on the monthly time frame. That's between this axis and this current one. So technically, we should be expecting a downward movement. On the weekly, we saw a rejection candle a couple of weeks back, which is still an indication of a downward movement. Though last week we saw some bullish rejection candle there. Daily, we are seeing what looks a lot like a double top pattern, which may lead to a long-term bearish movement. But then we will not also neglect the fact that most of us are short-term traders, scalpers, day traders. So we have a support. That area that is supposed to be like the neckline of the daily is currently acting as a support. So one or two things may happen at this point. We have either a retracement or a breakout that can lead to further bearish continuation. So it depends on whichever one comes. It could happen either ways. So this is the 4-hour time frame. 1 hour. All right. So this is 15 minutes time frame. I'm seeing what is forming is slightly looking like an inverse head and shoulder. If it forms completely, we may have, a slight bullish movement, which can generate something in the range of like 100 pips. But I'll suggest you just catch like 30, 50 pips and you are out if price breaks out to the upside, and confirmation as usual in this one, RSI should be clearly above 50. MACD may not cross above zero, but RSI should be clearly above 50. This is the 15 minutes time frame. RSI is currently 44. It needs to cross above 50 if you're buying. Please take note of that. Now, that's our first scenario. The second scenario is that price also could, you know, after the retracement or even before the retracement, price could break out downward. If price breaks out below the support, wait for a retest, then continue downwards. So those are the two scenarios that's possible on the GBP, JPY. It can either be a slight bullish movement or a bigger bearish movement. All right, so GBP, AUD, AUD, USD. So I've already analyzed AUD, USD. We're bearish. We're bearish on AUD, USD. So I'll check GBP, AUD. Now for GBP, AUD, I was looking at this last week. It's having similar structure to what you saw on the Euro AUD. Price closed on this support zone last week, and technically we should be expecting a reversal this week. So we'll go to 1 hour time frame. Now the issue on the 1 hour now is that we are having a lot of what looks is not defined. It's more like a range. So I will represent it with a rectangle box. Price is ranging on the 1 hour. However, if price is able to break out to the upside, we can look at taking a buy. We are bullish on this. We are not bearish. Only that the current structure is not so defined. But if a breakout happens, definitely you can take a buy. RSI should be above 50. It's currently at 50. MACD is already above zero. So we're only waiting for a new candle to break out above that box, that rectangle box, for us to trigger a buy. And if we trigger a buy, one of the levels price may get to is this region. Two major levels. One is this current resistance, and then this other support, which may turn resistance here. Those are two key levels price may get to. And the first level can give as much as 50 pips. The second level can give as much as about 100 pips. So that's the possible movement on the GBP AUD. We are bullish on the GBP AUD. I'll just oblige Mr. Allwell for that AUD USD, and I'll be ending the analysis there. And that's, I said, we are bearish on the AUD USD. This is the 1 hour, which I've analyzed earlier. We're expecting a breakout to the downside. All right, that'll be all from my analysis this morning. If you joined us late, don't worry. The link will be dropped to the group you belong to, and I will encourage you to watch it over and over and over again. Don't forget we have physical training session on Tuesday at both our Abuja and Lagos office. Do join us at these locations. If a beginner trader and all this looks complex to you, don't worry. We too were that phase at some point in time. That's the more reason why you need to join our physical training session. But then if you are completely out of town, out of Abuja, outside Lagos, you can always join us also for our online session on Mondays and Wednesdays, 4 p.m. We have online trainings which you can learn even a lot from. All right, so we hope to see you at all these events, both off-site and off-site. So we're ending the analysis here for this morning. Take care and have a great trading week ahead. Bye-bye.
Thank you, sir.
You're welcome, sir.
You too, sir. Thank you very much, sir.
You're welcome.